Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hello Lauren.
Hey Curtis, hey everybody.
So Lauren, we're here in the month of April and we're still
right.
working on tax return filing.
That's right.
So we get this question quite a bit, is there still benefits for tax benefits for owning a home as your principal residence?
That's right.
So we're not talking about rental properties, we're talking about principal residences. And it was interesting, the biggest benefit for most people is the mortgage interest deduction.
Right.
And the Congress has estimated that the home mortgage interest has saved taxpayers each year about $70 billion in taxes. So it's a pretty big number.
Right. Yeah.
So I thought what we do is what's another deduction from a home that typically works on Schedule A?
Real estate taxes.
Yeah, property taxes, right? Yeah.
Yep.
So there's a couple little minor ones. This is for 2014, but if you're paying mortgage insurance, for on your mortgage, you can still take that as a tax deduction separately. And then related to one of the things my favorite things about home ownership from a tax savings point of view is the exclusion of the gain on the sale of a principal residence.
Yes.
So if you're single and you own your home as a principal residence for 2 out of any of the last 5 years, you can exclude up to $250,000 of capital gain. And of course, if you're married, you can double that and take $500,000. Now, the last thing I wanted to say is that I never promote that home ownership should be done for tax purposes. Obviously it's where you're going to live, and there probably is some benefits from appreciation. But one of the things that people don't think about sometimes is that when you itemize your deductions, you take the higher of the itemized deductions or your standard deduction.
Right.
Right. So for a single person, the standard deduction is $6,300 for 2015, and for married filing jointly, it's approximately $12,500. So before you start getting $1 of tax benefit for itemizing your deductions, they have to be greater than that.
Right.
Yeah.
So
So conversely, right now we're still at historically low interest rates. So depending on where you live and how big your mortgage is, it may not be as tax beneficial as
right.
First promoted, because you have to subtract out the standard deduction. So anyway, what's your take on that?
Yeah, but the one thing I would add to that is that we see very few instances where anybody does get above the standard deduction without a mortgage.
Correct.
That's a pretty uncommon situation. It happens.
Right. So it'd have to be like really high property taxes or high charitable contributions.
Yes, exactly. Or both.
And then the other one would be maybe sales tax deduction might be large. But that being said, as we know right now, 2014 is the last year the sales tax deduction will be allowed. So okay. So anyway, long story short is there are still some tax benefits for home ownership, but it's something worth analyzing. Don't use that as your main motivation for taking on that mortgage. So thank you for watching this episode of Erickson TV. We'll see you next time.
See you next time.